It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, July 16th, 2015. I know. I apologize about last night. I got stuck in a meeting. Trust me, the meeting that I was stuck sitting through last night, I would have much rather have been here working hard with you guys and gals. So I apologize my absence last night. Doesn't happen very often, but every once in a while life catches up on you and you can't get it all done when you want to get it done. Back from the dead here this evening. Hope you had a great Wednesday, by the way. Thursday evening, July 16th, we have a jam-packed newsletter in store for you guys. We get a rollover alert, crude oil. We get a Summer Friday alert. We get an OPEX alert. Could we pile anything more on? We'll talk about all that tonight. But really, though, what really is going to take center stage tonight is overbought, oversold, down at those lows, up at those highs, right? You got crude, euro, gold digging lower. S&P, somebody strapped a rocket to that S&P. Well, it does make sense, though, and you're going to see why in a second. So you got to stick around for tonight's newsletter. It's got jam-packed, tons of value in the newsletter for you guys tonight as we head into a summertime Friday. But, before we talk about our strategy for a Summer Friday, I want to remind you, everything I talk about in my newsletter, I teach it and I trade it with all of our students here at School of Trade. Head over to schooloftrade.com, grab a free trial, contact our support team here in the office here in Los Angeles. We'd love to help you guys out, launch a new career. We'll talk about that later on, though. We got some work to do. First of all, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube page right now, that's perfectly fine by me, but you've got some resources waiting for you. There's a link hidden in the description of the YouTube video, so make sure you check out that link. That'll take you over to our blog page. Really, there's three big reasons why you should check out the blog here. First of all, you can download all the charts you're going to see me using tonight. Every chart I'm going to show you tonight, you can download those charts and have it ready for you tomorrow on your own computer. Second thing, upper left-hand corner, if you're not a member of School of Trade, I'll encourage you to take our free trial, right? But also I got a free pass for you. Come out and test drive our live trade room for a day here at School of Trade. Grab your free pass, upper left-hand corner. And then lower left-hand corner, right above my ugly mug, you'll see a spot to join our nightly newsletter mailing list. Name and email address. That's all I need from you. And then don't forget, if you register for the newsletter list or you grab your free pass, I'm going to send you that verification email, so make sure you check your inbox. That way you can verify that you're not a robot. I don't think you're a robot, but in case you are, you probably shouldn't be on my list. Anyways, bottom line is check your inbox because I'm going to send you that verification email. And don't forget, check the spam folder, the junk folder. You know the drill. Find that verification email. You ready to rock? Boy, it feels good to be back here. I always hate missing you guys during the week. Let's jump right in here with the euro. We're covering euro, gold, crude, and of course, how can we forget about the E-mini? We'll cover that here in just a moment. How about the euro? Euro is bearish, oversold at the lows of the range, which means buyers will be, this is very important, buyers will be waiting patiently for sellers to fail. But what about the sellers? What are the sellers going to do down here? Sellers need to wait for the buyers to fail. Now, this is going to be a common theme throughout the newsletter tonight because everything is either digging into those lows or right up at those highs. I'm looking at you, S&P. Let's talk about this for a second. Here we are down at these lows, right? Here we are down at these lows. So we're moving lower, we're moving lower, we're moving lower, and now here we are. I mean, we are literally range lows, extension support, right? Whatever it is. I don't care what it is, but these are major support levels, right? We're a good, very far distance away, from the 200 EMA, right? So we're expecting a correction, but expecting doesn't work for professionals. We don't just guess. So what are we going to do? Well, here's the way you want to trade it. First of all, let's put a faster moving average on it. A 20, a 50, a 100. Pick one, whatever your favorite one is. It really doesn't matter. What I'm going to do is I'm going to use a little bit faster moving average, and this is what we're going to use to figure out how we're going to buy and how we're going to sell. Sellers, listen up here first. If I'm a seller right now, you cannot sell these lows, right? And you've heard me say this many, many times before. So how do you sell it then, Joe? What am I going to do? Wait for price to go all the way back up and then come back down? Well, you could, right? That will be where the easiest money is going to be made, right? Wait for a bigger correction, profit taking at the lows, bargain hunting at the lows. But if we're in a really strong trending market, which we've seen over the past few days in a few of these, what you want to do is you want to wait for this price, get back above that moving average, right? Fill in the blank, whatever moving average you want. I, of course, provide all this to our students here at School of Trade. And then you want to wait for the buyers to try to keep it up and then sell it back down. It's a little bit aggressive, obviously, but that's the way you need to do it. You can't sell the low. Right? You can't sell the low. And remember, my strategy always is I like to let things try twice. So what I'll do is I'll wait for the buyers try once, try twice, and whoop, right? Now you get yourself up off that support level, so you've got some profit built in, and you've got the buyers trying, and of course, find out where their stops are going to be, think about where you'd put your stop, and sellers, that's what you've got to keep doing. You've got to let this thing get up off these lows and then sell right into those stop losses of the buyers. And again, a faster time frame moving average, right? Members, you know what we use here. If you're not a member of mine and you want all the details, come out and join me. I got to keep something for the imagination for you guys, right? Okay, so now you know the sellers. Sellers, wait for buyer failure. Now, what do you think we're going to do for the buyers? Yeah, wait for seller failure. Okay, now we've talked about this extensively. You're already at a great spot here right now to be buying, right? So, I mean, this is always a challenge. We're in a downtrend, but we're at support. I want to be a buyer. What should I do? I don't want to buy in a downtrend, right? So what I'm going to do is, again, that rule of twos. I'm going to wait for price to get back up, wait for those buyers now, right? And then, of course, back up here. I was talking about buyers. Wait for the sellers once, right? Those are my little sound effects there. And then you're buying above that moving average, right? Use the moving average as support and use that second attempt, that resistance, that's where the stops are going to go, and that's where you want to be buying, right? Okay. Now, again, this is the basic fundamentals of it. One more time. Am I a seller? If I'm a seller, I'm looking for price to go back up. Buyers try, right, and fail. Sell right into those stop losses. Get up off this support. That way you've got room to breathe, right, because you don't want to sell into those lows. If you want to be a buyer, it's kind of the same thing, except you're looking for once, twice down, right, and then back up. Okay, obviously there's more profit potential to the upside, but at the same time, though, you're going a little bit against the grain here, right? Okay, so that's going to be, this is the basic fundamentals. And remember, this is just a crude drawing here. You know, crude, no pun intended. Well, maybe there was, but this was just a rough drawing here. We do all of this all day long with our students here at School of Trade. So now you know more about what I'm looking for, right? Now let's dig in. And now you can use these levels along. Again, I'll provide you with the strategy and all of the education you need to know the details of this, right, when you come out and join me in the trade room. So, where are we? We're bearish, and we're all the way at the low. I mean, I kind of gave up after I found 10 areas of support down here, right? I mean, look at this. You get a major measured move, right? That is an exact measured move. Yeah, ding, right? There you go. There's major support right there. You have a more minor measured move, right? Strike two. There's our second major support, right? Oh, you want one more? Okay, here's one more. We got trading range. Yeah, I know, right? That trading range we've been watching for the past 3 weeks. yeah, that range is still there. Copy it, paste it, right? Projected on down. Where are we right now? We're at range expansion support, right? There is 3 easy areas. Those are 3 easy reasons why, again, you really got to be careful being a seller here right now. You're right down at these range lows. Okay, also, we had this price wedge, right? This price wedge, and this is classic price wedge. Just when you think we've broken free of this range, it's going to come right back up into that range here, okay? So, sellers, you want this thing to get back up off these lows and then catch those buyers sleeping and bring it back down. Again, your job as a seller starts with patience right now because you really got to be patient. Now, obviously, the easy money for a seller is going to come up at these major resistance areas. But if we don't make it that high, which this is the euro we're talking about, right, may not be able to make that push higher here. So if you want to be a seller at these lows, wait for price to get up off these lows, look for the buyers to fail, and sell it back down. What if you're a buyer? Exact same thing. Now, look closely, though, right now, because on the euro, those sellers have already tried once, right? Look, came down, they try once, go back up, try again. If they fail that second time, that's probably going to be your green light here, right, that this thing's going to take off to the upside. Tough to tell right now. We get a summertime Friday coming around the corner. We got the whole Greece soap opera happening right now. They're drumming up support. They did get, a green light from Parliament. I'm purposely trying not to keep up with all the drama right now and focusing on that chart. So buyers right now, you're waiting for sellers to try one more time and fail. If you're a seller right now, you really got to get this thing up off that low, see those buyers try to take it, and then bring it right back down. We'll be watching this tomorrow morning in the trade room live in real time. Now you know the plan. Let's keep going. Ooh, man, S&P. The little market that could. I mean, literally, somebody strapped a rocket ship to this market here this week. I'm not going to go into all the reasons why I think it might be happening right now. In my personal opinion, while the cat's away, the mice will play. And while the smart money is on vacation right now, this thing just keeps on going. Now, again, I talked about it earlier. If you're wondering, how far can this thing go? Well, remember, this little doozy has been on my chart for the last 2 weeks, right? There's no surprise here. This is a range expansion, right? Take the trading range, copy it, paste it, and you'll see that's exactly where we are. This is classic. And what normally happens, again, we're going into a summertime Friday. It may overextend a little bit because the volume's a little bit lower right now. And we do have an OPEX Friday coming around. But the bottom line is that we usually are going to now, remember the strategy, remember what I talked about, now flip-flop it, right? You're now in a bullish trend, but you're way, way overbought. Top of the range expansion, top of the channel. You can't buy here. Well, you can, right? But if you do it consistently over a long period of time, you're going to lose money being a buyer here. This one might work. Remember, professional traders don't think onesie-twosies. We think over the next 100 examples of these, am I going to make money if I buy these highs? Yeah, I get it. Well, but Joe, I made money buying the highs on the way up. That's okay. But again, do that every day for the next few years and you'll be broke, right? You will. So we know we don't want to buy these highs. Sometimes they work, but over a long period of time, they're not going to. It's called probability, right? It's the way a lot of this stuff works here in this life of ours. Take the insurance industry, for example. You think they're guessing? No, they're not guessing. So the reality is the E-mini is bullish, but well overbought. And I hate that term overbought because there's no such thing as overbought. The market can do whatever the market wants to do. But we know statistically speaking, probability speaking here, we are going to see profit taking at these highs. We're going to see sellers bargain hunting at these highs. And there's that self-fulfilling prophecy, right? That being at the channel high, people know that and yada, yada, yada. So we're at the range highs and means really we need to wait for a deeper correction if we're going to be buying here. Okay, so what are my options here right now? Let's say I'm a buyer. If I'm a buyer, I want to wait for price to pull back off this high before I start buying again. And you've got some great opportunities here to be a buyer. Now, also, too, remember, another aggressive way to be a buyer at these highs is to anticipate the sellers trying to sell, right? And when they give up, that's when it goes again. So 2 attempts to go short off the highs, second attempt fails, buy into their stop losses. That will give you a little bit of breathing room off of that resistance. What if you're a seller? If you're a seller right now, this one's easy, right? You probably can finish my sentence. If you're a seller, wait for the buyers once, twice, right? And then you're selling into the stop losses of those buyers. Only thing you got to be worried about if you're a seller right now is just simply selling directly into those green boxes in the chart because you don't want to be selling into major support. All right, so E-mini S&P is bullish, overbought. The buyers out there, right, if you're a bull right now, I realize it's tough not to be a bull here of this market, right, this rocket ship market. Stay patient if you're a buyer right now. If you're a seller, look for those buyer failures up at these highs, right? So look for those buyers to try, right? And when they fail, they should give up on it pretty quickly because, of course, I mean, unless you're living on Pluto right now, which I hear is nice this time of the year, by the way. It's kind of like, isn't it like Australia where it's like opposite seasons, the toilets flush the other direction, something like that? Anyways, where was I again? You lost me on toilets flushing. But the bottom line is, buyers, stay patient, wait for deeper pullbacks. Sellers, get at it quick, right? Get at it quick. Look for those buyers to try and fail. Really, ideally, what you want here is to see these things overextend a little bit, once, twice, and then have enough room to sell it down into these support areas below. And then, of course, because you know the buyers are going to be coming in here, especially if we push down towards these swings, 2095, 2090, et cetera, et cetera. Bullish chart here, bullish, bullish, bullish. That means buyers stay patient, okay? Sellers get at it at these highs, but only after those buyers try and fail. All right, guys, let's keep going. Now you know the plan for the S&P. How about some crude? How about some crude, right? Just like clockwork here, just like clockwork, right? The word was rotation this month of July, right? The word was been rotation. Low to high, high to low, low to high, high to low, low to high, high to low. I've been talking about this since late, right? Since, well, you can see the date right there, right? Since we came back from 4th of July, right? We've been talking about this for a while now. Nothing new here. What am I looking for? What am I looking for, right? The word is traps. Bull traps the highs, bear traps the lows. I mean, this is easy peasy, man. And we talked about this first of the month this month. We said, this is great. I love trading ranges because, well, besides staying patient, right, and staying the heck away from the middle, you know what Mama says, right? Mama says, don't fiddle with your middle, Joe. We know, just stay patient and just wait it out, right? According to history, though, bear traps the lows, bull traps the highs. It works incredibly well. So here's another example, just like the euro, kind of the opposite of the S&P. Okay, here now we have a bearish market at the low of a range. What are we going to do? Well, crude is bearish at the lows of the range. Sellers, what if you want to sell? What if you want to sell this sucker right now? If you want to sell it, the easy money will be after a big correction, right? Bigger correction, back up, and of course you know I'm looking for bull traps up at those highs, okay? But what if you want more aggressive? If you want more aggressive, wait for it to come up off this low. Wait for the buyers to try twice, right? And then you can sell it right back down, okay? A little bit lower percentage because you're right near those lows and you're going to start seeing this price start to push higher. So if you're a seller right now, the word is patience. If you're a buyer right now, what do you want to do? Try once, try twice. You got it. Buying right into those stop losses after those sellers try twice, right? Human beings love to try twice and then give up, right? Why do you think double tops and double bottoms are so prevalent in these markets we trade? Guys, don't forget, rollover tomorrow on crude. Now, rollover is always such a confusing thing for new traders of futures, right? In my opinion, contract rollover really is what kind of sets this all apart from Forex and stocks, right? Stocks, no rollover. Forex, no rollover. Futures, rollover. What was the rule again? See, here's the way it works. Crude's every 1 month, gold's every 2 months, the E-mini and the euro every 3 months. Try to think of it that way. It's either rolling over every 1 month, every 2 months, or every 3 months, right? So it's going to be crude every 1 month, CL, GC every 2 months, and then everything else is every 3 months, right? So the E-minis, the currencies, the bonds, right, interest rates, they'll be every 3 months, right? So you've got the ES and the 6E, right? That'll be every 3 months. Okay, so tomorrow, you can pretty much set your clock by the 18th of the month for crude oil. Okay, so tomorrow, of course, being the 17th of the month, okay, we are going to, wait, did I get that wrong? Look at that. Let's make sure we change that right now before I look a complete fool here in front of my good friends here in the newsletter. Bottom line, I seem to be thinking one day ahead of time, McFly. So we have tomorrow, 717, most likely going to be seeing rollover on Monday, right? Tomorrow being, and again, what was I? Boy, back to planet Earth here, JJ. I miss one day, and all of a sudden, I'm just flying off the planet here. Friday, 717, we are most likely going to see this volume roll over. Today we had, let's see here. Here's a market analyzer or Ninja Trader. I look at the 815, I look at the 915, right? And as soon as I see volume trading more on the 915, that's when I'm trading the 915. Okay, deal? So all you have to do is, it's not going to happen tomorrow. Tomorrow you're still going to be trading the 815 contract. But on Monday is almost a guarantee you're trading the 915. Alrighty? How do you know when to trade the 915? It's easy. Look at the daily volume. And when the volume is higher on the 915, now you know it's time to move to that front month. Okay? Trust me, you're not going anywhere near contract expiration. Your broker's not going to send you a barrel of crude oil for delivery. It doesn't happen that way. Rollover for day traders is when the volume rolls over. It is not the same thing as contract expiration, which will happen later on this month. Okay? So be aware, we're sharing volume right now between the 815, which is this chart, and the 915 contract will be the next month. Remember, crude rolls over every 1 month. Okay, so rollover alert. Tomorrow, stick to the 815. But again, the 915 is almost a guarantee on Monday morning. Okay, check the volume. Once the daily volume is higher on the 915, then you know it's time to go to the 915. Okay, tomorrow it'll probably be about half and half. So I would expect a little bit lower volume tomorrow. Just simply means be patient. Make sure you get to it early, get out of it early on rollover day. Rollover day is always thought to be so dangerous, whatever. You can't really mess it up. If you forget to roll over, well, your chart's going to be just sitting there because there'll be no volume traded. Okay, your broker won't care too much because expiration is not until the end of the month. So don't worry about it. Just be aware. Tomorrow is going to be that day where we split volume between the 815 and the 915 contract on crude oil. And then, of course, the 18th of the month will be on Saturday. So come back on Monday, trade the 915 contract. So crude oil, bearish at the lows. If you want to sell it, wait for price to correct off these lows and then sell into buyer failure, or wait for price to come up into these resistance areas overhead, and that's where you're looking for additional selling opportunities overhead. The buyers really have the leg up right now. Even though you are counter trend right now, you're down around the lows. So if you're a buyer right now, we get a measured move going lower. So if we do poke our head a little bit lower here, it's almost expected. Remember, these markets are going to make you think that we're going to keep going lower, and then they're going to fail and go higher, right? That's why I always tell you, be suspicious at this low, right? But let those sellers try a few times, right? And then buy into those stop losses. And then if you're going to buy these lows, remember, it's counter trend. So you want to make sure you take a quick first profit target, tighten up that stop, and then hold that target up to your overhead resistance areas overhead, right, to get your big runner target on the day. Now you know the plan here for crude. And again, don't worry about rollover for tomorrow. It will most likely be on Monday. Last but not least, here we are on the gold. This is a very similar scenario here on the gold today. Very similar to the euro, very similar to crude, the polar opposite of the S&P. Here we are on the gold. Gold is bearish, trading at the lows of the range, which tells us to avoid selling the lows, wait for a correction higher up to resistance before we start selling again. Again, what if and obviously you can see here, we've got multiple bear channels. We are trying to rotate. Remember, we're going to try to rotate down to these lows here, right? So keep that in mind as we're going lower here right now. This gold is going, and goes for every market, not just gold, but we are trying to rotate down to that low right now, and we're pretty much right here in the process. So what's going to happen is you're going to start seeing some support come in here, right? Buyers will undoubtedly try to buy this thing back up before it makes its next leg down. I mean, maybe I'm wrong for tomorrow, but this is typically what's going to happen here. You're down around those range lows, it may slice right through it, but you're better off waiting for the buyers to take it, wait for the buyers to fail, and then sell this sucker right back on down. On top of that, on top of this bearish trend we have here, you're going to notice here a plethora of measured moves here. We have the longer term measured move, which puts us at 38.2, give or take a few ticks there. So that's going to be major support. That's a great place to look for sellers to try and fail, right? So you're going to wait for price to come down, hit that move, try once, try twice, right? Buy right into that stop loss by the sellers. If you're going to be a buyer at these support levels, wait for sellers to try twice, buy into their stop losses. But remember, you're dealing with a counter trend move here. So quick first target, tighten up that stop, and leave the rest of it to run. The next thing, of course, is, look, A, B, C, D, right? We're right there. We're right there. We got a lot of measured moves here. Now, again, the fact that we're trading at support just simply tells me if I want to keep selling, just like I said before, if you want to keep selling, wait for those buyers to try to get it going, right? And then you got to wait for them to fail. That way you get up off these lows. You've got some space to breathe now. Okay, so be patient if you want to be selling here right now. Wait for the correction. Wait for the buyers to get all perky and then sell into those failures. And again, I'm not giving you everything on this newsletter. I can't do everything because I don't know where we're going to be tomorrow morning in real time. So come out and join me tomorrow. I'll show you guys exactly how to do this stuff on a live volume chart. That way we can make sure we do this the right way together. All right? You're not alone out there. I'm trying to give you the basic fundamentals here as we go forward. So we were in a bearish trend, oversold at the lows. We're going to most likely keep going lower, but we expect to see a correction off those lows first. Okay, guys? So avoid selling the lows, wait for a correction higher, and then, of course, again, as we keep saying here, the best selling opportunities are going to come back at these resistance zones overhead, as you can see marked up. But if you want to be a little more aggressive to sell, just wait for the buyers to try a few times, get up off that low, right, and then you can sell it right back down in. Just be aware, though, do not sell directly into these support levels listed below. If I had to guess right now, though, this area right here around the 1130 area, you know, I've been talking about these range expansions, and this trading range is just screaming at us right now. Take that trading range, copy and paste it down, 1130.1, and if you look closely, it also lines up right with the low of the short-term channel, the longer-term channel. This is a real juicy area right there, and gold is just crazy enough of a market to take off to the downside and do that for us. I don't think we're going to get much more here out of this market as far as just blatant downside here until we get a little bit more here out of Greece, right? I mean, I would imagine that's what they're going to be waiting on. We got OPEX tomorrow. OPEX is going to affect pretty much everything because you can combine it with a summertime Friday. You've got rollover on crude oil. Oh, what else? I think that's it, right? I think that's it here for tomorrow. The big thing for tomorrow, though, is it is a summertime Friday. And so don't forget, summertime Fridays mean get in early, get out early. Get that money out of the market in the European session, morning session in the U.S., and then call it quits. Don't give money back to the market late on a Friday. There ain't nothing good happens afternoon on a Friday afternoon, right, besides margaritas and tacos here on the beach in California. Guys and gals, thank you so much for being here today. Another incredible week along with you guys and gals in our nightly newsletter. I want to remind you, though, follow the plan for tomorrow, early in, early out, and then if you have some time for tomorrow, check out the free trial here at School of Trade. We've been doing this here at School of Trade longer than anyone else on the planet. Trust me. Trust me. Look around. You'll see exactly what I'm talking about, right? I was doing YouTube videos on day trading before YouTube was owned by Google, right? For all of you kids out there. Now, beginner, intermediate, and advanced, and we've always got someone standing by here full-time, 24/7, 365 to help you guys out. Guys and gals, be well out there this weekend and wear the sunblock. Wear the sunblock, would you? Right? Think of the kids. Think of the kids. Have a great weekend. We'll see you back here Monday evening for the next edition of our nightly newsletter, or come out and see me tomorrow morning, 8 a.m. Eastern time, and we'll do it all in real time. I'm out of here. I need a glass of water here. Boy, oh boy, what a day. What a day. Have a great day out there, guys and gals. Adios, amigos. Bye for now.